RZLV AI, trading on the NASDAQ under ticker RZLV, is currently active in today's session, November 6, 2025, with a live price of $4.05. The stock opened the day at $4.14, matching yesterday's close, but has since seen selling pressure, pushing it down about 9 cents, representing an intraday drop of roughly 2.17%. Today's trading has been confined to a tight range between $4.04 and $4.24 on volume that is tracking slightly below its heavy daily average. But this small intraday dip is almost background noise compared to the fundamental news that just hit the wire. The expectation for a company like RZLV has always been that it's a high-growth, high-cash-burn AI play, a story stock dependent on its next round of funding. The reality that landed just yesterday completely upended that narrative. RZLV announced it has secured an oversubscribed $200 million financing. This isn't just a minor capital raise, it's a massive injection of capital that fundamentally de-risks the company's balance sheet for the foreseeable future and provides a significant war chest to fund its aggressive expansion. This news immediately forces a re-evaluation. The company isn't just surviving, it's now fully funded to execute its plan. This financing news comes just days after the market was already buzzing about RZLV. The general belief about this company was that it was a small, ambitious player in the AI commerce space, but that perception was challenged when, following Amazon's third-quarter earnings call, RZLV's management team quickly and publicly welcomed CEO Andy Jassy's comments about agentic commerce being the next great transformation in online shopping. RZLV positioned this as a watershed moment, a complete validation from the world's largest e-commerce platform of the very architecture RZLV has been building since 2016. The market is now being forced to ask if RZLV isn't just another AI company, but perhaps a first mover with a multi-year head start in a category Amazon itself has now spotlighted as the future. This combination of events, massive funding, and perceived validation from an industry giant has turned RZLV into one of the most watched stocks on the market. The daily trading volume has been immense, consistently trading millions of shares as investors try to price in this new reality. The stock has been on a volatile ride, soaring from its 52-week low of $1.07 to a high of $8.45, and is now consolidating around this $4 level. This consolidation is a classic battleground as the new bull thesis clashes with a very entrenched and very real short seller contingent. Let's talk about that short position because it's a critical piece of this puzzle. Many investors just see the news and the growth story, but the reality is that RZLV is under significant short seller pressure. Current data shows a short interest of approximately 11.55 million shares. This represents over 10% of the public float, a figure that is undeniably high and indicates a significant coordinated bet against the company. The short thesis is easy to understand. Look at the financials. This is a company with a market cap north of $1 billion that in its most recent first half 2025 results posted revenue of just $6.3 million. Even with a staggering 426% year-over-year growth, the price-to-sales multiple is extreme, and the company is still losing money, reporting an adjusted EBITDA loss of $17.7 million in that same period. The shorts are betting that the company's ambitious guidance is just talk, that it will burn through its cash, and that the valuation will collapse back to earth. But the data shows this is not a simple short. The borrow fee rate, the cost to borrow shares to short them, is sitting at an elevated 9.58%. While that's down from the 13% seen in October, it's still expensive, showing a high demand for shares from short sellers. More telling is the fails to deliver data. In late September, RZLV saw a truly massive spike in FTDs, with over 7.9 million shares failing to settle on a single day. This is a massive red flag that can indicate intense shorting activity, and it's a key piece of data that retail investors monitoring the stock have been highlighting on forums and social media. The days-to-cover ratio is low at roughly 0.6 to 1.3, meaning that based on average volume, shorts could cover their positions quickly. This isn't a classic low-float squeeze setup. Rather, it's a high-stakes war between the short thesis of overvaluation and the bull thesis of next-generation technology. What's your take on the rising short interest? Smart money or manipulation? To understand the bull side, you have to understand what RZLV actually does. The company is pioneering what it calls agentic commerce. The idea is to move beyond simple e-commerce and create an AI-powered infrastructure that allows autonomous AI agents to reason, decide, and transact on behalf of consumers. Their Brain Suite platform, which includes Brain Commerce, Brain Checkout, and their proprietary Brain Power large language model, is designed to be this infrastructure. They don't just sell an AI chatbot, they aim to provide the entire backbone for AI-driven retail, from visual search and conversational commerce to a new digital asset payment rail called SmartPay, which they acquired. This is the trillion-dollar wave management and bulls are pointing to. They aren't just an app, they are positioning themselves as the underlying system for this new era of commerce. And this is where the expectation versus reality framework becomes so critical. The reality is the $6.3 million in H1 revenue. The expectation, however, is based on the company's own explosive guidance. On October 1st, RZLV didn't just report its H1 numbers, it raised its full-year 2025 guidance to a minimum of $150 million in annualized recurring revenue, ARR. Furthermore, it initiated 2026 guidance for an ARR exit rate of $500 million. This is the entire bull case in a nutshell. The company is telling the market that its H1 revenue is irrelevant and that it is in the process of scaling from $6.3 million in a half-year period to a run rate of $500 million in just over a year. This is an audacious claim. If they achieve it, the current stock price is extraordinarily cheap. If they miss it, the short thesis is proven correct. The $200 million in new financing is the actionable catalyst that makes this guidance, for the first time, seem plausible to many. That capital is being directly applied to an aggressive commercial rollout. Just yesterday, the company announced the hiring of a former Microsoft executive, Elizabeth Lachar, to lead its U.S. sales expansion. The plan is to build a large, dedicated sales force in the US and Europe to accelerate the deployment of its platform. They already boast an impressive client list, including major names like H&M, Ferrero, and Urban Outfitters, which gives their claims a layer of credibility. The new capital and sales team are intended to convert this pipeline into the massive ARR figures they have promised. Comment below if you think RZLV can hit its $500 million ARR guidance for 2026. Looking ahead, the path for RZLV is now clearly defined, but it remains a high-risk, high-reward proposition. The primary catalyst for the bulls will be the quarterly reports. The market will not wait until the end of 2026. It will demand to see a clear and rapid ramp-up in ARR in the coming quarters. Any sign that the $150 million target for 2025 is in jeopardy will likely be punished severely by the market. The upcoming investor conferences at RBC Capital Markets and Roth in mid-November will be a key opportunity for management to reinforce this narrative. On the risk side, execution is everything. Having $200 million is one thing. Deploying it effectively to build a global sales team and onboard enterprise clients at this speed is a monumental challenge. And of course, competition is now officially awake. Amazon's comments validate the market, but they also signal that a giant is turning its attention to this space. For investors trying to navigate this, the key signals to watch next week are institutional filings and the options chain. We know from June 30th filings that major institutions like BlackRock and Vanguard have taken positions, but we need to see the 13F filings for the quarter that just ended to see if they added to their positions during the recent volatility. Furthermore, rising open interest in call options would signal that traders are betting on more upside, while a spike in put options would show the short thesis is gaining traction in the derivatives market. In the end, RZLV AI has successfully shifted its narrative. The expectation was that it was a speculative, cash-starved AI idea. The reality, following $200 million in funding and validation from Amazon's CEO, is that it is now a fully funded, high-growth company with an audacious plan and a target on its back. The intraday dip today is just market mechanics. The real story is the tension between staggering future guidance and a grounded, unprofitable